Should you buy ARM Holdings? Stock symbol ARM. This is the much hyped IPO of 2023. A lot of people are asking me, Ryan, should I be getting into this? And it seems very similar to all the hype that we had when Snap was going public, when Meta was going public, when Twitter was going public, when Rivian was going public. Everybody wants to get into these IPOs. They think that they're getting in at the base level. And the fact is that's not true. History will show us that more times than not, even the most hyped IPOs struggle to provide any shareholder value initially. It doesn't mean that it doesn't come around eventually. But if you buy right on that opening day or the first week or the first couple of weeks of trading, you're usually going to be bag holding for a long time. And the bigger problem is that you could have gotten in at a much cheaper price if you just showed some patience. IPOs are one of the greatest examples of FOMO, fear of missing out. Traders want to be able to say that they got in on the first day, and the fact of the matter is that's usually the worst time they could possibly be getting in, because that's when the street is trying to offload their shares to all the retail hype to finally be able to book some gains that they've been waiting for going into this IPO. So don't be the person that falls for that. And I get it. ARM opened up at 56.10, went all the way up into the upper 60s, and people are saying, man, this was a great trading opportunity. Okay, if you want to scalp it, that's fine. But then how are you managing the risk when it's moving 5, 10, 15% at a clip? It's very difficult to manage the risk on that. So it's best just to completely stay out of it altogether. Again, doesn't mean that there won't be a time for you to own ARM. But now is not that time from a historical perspective. What I'm going to do in this video, I'm going to show you what the other much hyped IPOs did within that first few months of trading and how much better prices you could have gotten in at if you would have just waited a few weeks to a few months for the stock to fall and to be able to get in at a much better price. But first, make sure that you like and subscribe to this channel. Click that little bell notification so you can be alerted to all my live streams and reels and videos like this that I do on a regular basis. Make sure to click join down below if you want more of my exclusive videos that I do each and every day, from bullish and bearish weekly watch list to my daily setups that I'm looking at each day, plus updates on all the big tech stocks and on the market as a whole. So check that out down below, or just go to swingtradingthestockmarket.com. Now, first off, let's look at Meta. It initially came out under the name of Facebook, just recently changed to Meta, stock symbol META. But let's look at its historical price performance to see how it did initially and how much better of an opportunity could have been had by simply waiting. So it opened up at 42.05 here back in 2012, and it dropped all the way down into the 17s. It dropped 59% before it finally bottomed and became the albatross that it is today, going all the way up to 380. But can you imagine the difference it would have made long-term to your portfolio? Waiting a few months for it to drop down into the teens and get those shares there versus buying them at 42, possibly being stopped out because you panic sold at the worst possible time. And the amount of returns that you would have gotten as a result is monumental. But let's not stop there. Let's go back even further down memory road to 2008 with Visa. Visa really wasn't that bad of an IPO. It popped for a couple of months. But when we zoom in on it, what did it do? It goes from 1488 all the way down to the 10s. That was a 33% drop. And when you consider getting in at 1488 versus waiting a few months to get in at 10, what a monumental difference that makes. Now let's speed up a little bit here. Let's go to 2017 and look at Snapchat, man. This was amazing. SNAP is the symbol. This stock at its IPO goes from 24 all the way down to $4 a share. That's an 83% sell-off. And yet this was one of the most hyped IPOs of 2017. And it always seems to happen this way. The bigger the hype, the bigger the sell-off. And we haven't had a lot of big IPOs here so far in 2023. This is really one of the first big ones. And this would also apply to the Instacart IPO that's going to be coming out as well. And if you still don't believe what I'm telling you here, look at Etsy. This was another big time hype stock. 2015, guys, 31 down to 7. This is 78% drop. And it all happened within the first year of its trading. You had to wait in order to get the big price. And it doesn't mean that you just jump in the first day you get a green candle on the stock. It just takes some patience. You want to see a basing pattern. You want to see some price history that suggests, yes, it's getting towards a bottom and it's basing. Because Etsy initially, in its 4th month of trading, had a pretty big boost there in 2015. But it was short-lived and ended up selling off for another 6 months. That's why patience is so key in long-term investing, swing trading, whatever you do. It is so key. Oh, let's go up to 2021. Let's get closer to modern day here. 2021, RBLX. This one's a little bit different because it opened up at 64 and actually had a pretty good 8-month run before it completely fell apart, going from 64 all the way down to 21. And all the way down here, that was a 66% decline. So again, it's imperative to wait for some bottoming to take place in these stocks. And then the next one, Spotify, SPOT. What did we get out of this one? A good couple months bounce out of it, but ultimately it dropped from 165.90 all the way down to 103. That was another 38% decline. And then it finally did bottom in 2019 and then took off. But my favorite, this one was supposed to be the next Tesla. This was the one that everybody says, if you missed the Tesla boat, Rivian will be the one that's going to make you rich. It's okay if you missed out on Tesla. Rivian's coming up right behind it. And guys, this stock here couldn't have been a bigger dumpster fire for traders. Guys, this one went, initially it popped that first month, but ultimately it opened up at 106 and declined all the way down to $11 a share. And it's still really not that far from the bottom that it reached just a few months ago. This had a decline of 90%, and this was the big one, guys. But now I know what you guys are probably saying, Ryan, there has to be some. You're just picking and choosing, and then there has been. I can show you a couple of them right now. The first one was Peloton. And Peloton, it traded sideways for 5 months, and then it just went on this rip-roaring rally. Yeah, if you got into it, you were handsomely rewarded. It goes from 29 up to 170. Now it's trading at $5 though. And why did it make that initial rally? It was the benefactor of some of the most amazing timing that an IPO could ever have. The entire economy shut down and everybody wanted these bikes in their home because they had nothing else to do. They couldn't go to the gym, nothing else. They had a monopoly on fitness. The other one that I would point out would be Airbnb. And they had an initial couple of good months and then they fell apart. So yes, you could have benefited for a few months there, but ultimately it did fall apart in 2022. And some of these, you will say, well, Ryan, 2022 was a horrible year for all stocks. That's true. But nobody can deny the fact that from IPO to IPO, there has been some really, really bad stories. And so ARM isn't any different. I don't think that this is a stock that's going to make you rich by buying it on day one. I think it's better to wait 5-6 months before buying it. Let the FOMO cool off. Let the hype go down. And buy it when there's a little bit more of a cooler heads prevailing mentality among yourself and among traders in general. But don't be buying into the hype right now. That's what everybody else is doing. Everybody's saying, well, if it drops too far, Nvidia is going to save it. Guys, have you seen Nvidia's stock price? That is probably one of the most overvalued stocks in the entire stock market right now. It's got a triple-digit PE ratio. There's a very good chance that Nvidia, especially if we do go into a recession, Nvidia is probably going to be one of those stocks that we're going to be talking about for years that crash the tech sector. So in conclusion, be careful with these IPOs. Look at the histories of Visa, Meta, Twitter, Rivian, Spotify, Etsy, Snapchat. I didn't even talk about Pinterest. It went from 24 down into the 10s because I have enough examples to show to you. It just continues to prove itself that buying IPOs on that first day, not the best idea. If you enjoyed this YouTube video, make sure to like and subscribe. Tell me down in the comments below, did you buy ARM? What is your intentions if you buy it? And if you haven't bought it, are you going to? And how long are you going to wait before you consider buying ARMs? Thank you guys, and God bless.